I'll show you this easy Bollinger Band strategy that we can use to take advantage of trends. You may see many Bollinger Bands strategies telling you to either buy at the bottom Bollinger Band and then sell when it reaches either the midline or the top, or sell the top Bollinger Band because it will come back down. But that just doesn't work. And if that did work, you could very easily set up a bot to go ahead and trade that. And the reality is that you don't get a good win rate with that. The reason being, let's say that the price comes down into this Bollinger Band, the lower Bollinger Band here, and your trading system says that you buy that because it will revert back to the mid or the upper line. It doesn't. It just goes straight down on the bottom Bollinger Band for a long time for a 20% drawdown. Let's say here that we reach the bottom Bollinger Band again, and your trading system says you got to buy the bottom Bollinger Band and sell it when it reverts up into the mid or upper line. It just goes straight down 20% again. So your hit rate on those is not going to be good. No one can make money like that. Like I said, if they could, they would just set up a bot to do that and trade the bottom and sell it when it reaches the mid or upper line. But that doesn't work. So what we're going to do is we're going to use the Bollinger Bands a little bit differently. We're going to identify a trend and then use the Bollinger Bands to identify the trend, identify consolidations, and identify breakouts. And that can give us a trading strategy where we can implement and get into trades and then get out of them when we want, when we think the trend is over. The first thing to do is identify your trade bias. What that means is the asset that you're trading, is it in an uptrend or a downtrend? Is it in a bull market or is it going into a bear market? So we're going to identify that first. Go over to your chart. This is on TradingView. TradingView is free if you don't use it. I'll link it below. Go to indicators on whatever asset that you're trading. Go over to RSI. You can put relative strength index in. If you want to get Bollinger Bands on, then search for those as well. Bollinger Bands right here. Bollinger Bands, you can click that on and just use the normal settings. Now for RSI down here, what I want to figure out is, what type of environment are we in? Now, the price is moving down. This is clearly a bear market, right? You have a big sell-off in the price of the asset. This is Bitcoin. Relative strength is going down. Now, it seems to actually bottom out around here. So the price seems to bottom out and move back up into some sort of uptrend. And the RSI is confirming that as well. So considering that Bitcoin is a growing asset and it seems to grow over time, it does have bull markets that last 12, 18 months, maybe a couple of years, then my bias is, okay, this seems to be an uptrend. The price is moving up very clearly. Right? The price is moving up, the RSI is starting to move up, and that's giving me confirmation that we are in an uptrend. Now, trends can change, but you have to get your bias. So we're in an uptrend, which means I want to go long and I want to buy and I want to find opportunities to buy. So that's my bias. I'm buying and I'm looking for opportunities to buy and ride the trend to the upside. Now we can use two different types of trading strategy with Bollinger Bands. The first one is using the Bollinger Bands to show us when volatility is tightening and the price is consolidating. Within an uptrend, after a consolidation, the price unwinds to the upside. That's an uptrend. So if you know that you're in an uptrend or you think you're in an uptrend, you can use Bollinger Bands. What do Bollinger Bands show us? They show us volatility. And when volatility is contracting and the price and the Bollinger Bands are moving sideways, that is showing us that the price is consolidating in its uptrend. And usually from an uptrend, you move much higher. So you can see that from the Bollinger Bands, right? The Bollinger Bands are trending sideways. They're having these tightening volatility profiles. You can see that. Each one of those, though, as it resolved itself, moved the price up very clearly. So these are great areas to get in. So we're seeing the Bollinger Bands tighten, showing us that volatility is tightening and the thing is consolidating before a next move. So these are the areas where you can get in and you can start to dollar cost average into trades. Don't think of a trade as one in and one out. You can think of 1, 2, 3, 4, 5, 10 entries to actually accumulate your position, to grow it as the uptrend continues. If you trade in the spot market, you can just go to your spot trading screen and buy, select dollar cost averaging. If you trade a bit more short term or you like to use leverage, I'm on the Bybit trading screen here. I can use just 2x leverage here, which means I put $50 in or $100 in. I can trade with $200. The reason being, in an uptrend, you want to dollar cost average those consolidations, get a decent average price, and then you move to the upside again. If you want some deposit bonuses on the exchanges I use, like Bybit or Apex, you can see down in the description below for the links there. You can get up to $30,000 as a deposit bonus on Bybit. You can get permanent fee discount on Apex and some other exchanges I use. You can see the details. The other way to use Bollinger Bands is to actually wait for them to start expanding, showing us a potential breakout of a range. So go to the price action of your chart and find the resistance level. So this resistance level right here is very clear. This is a sideways consolidation very clearly with a bottom and a top and the price bouncing between them. So we can use Bollinger Bands to actually let us trade a breakout. Now the first strategy I showed you was a consolidation strategy where you're trading this consolidation, you're trying to get multiple entries here, 4, 5, 6 entries, get a decent price for your trade, bring up the size of your trade and then wait for that breakout. But with a breakout trade, you ignore all of that and you just wait for the breakout to actually happen to trade. The reason being, you want to piggyback off that breakout. Now, that's more risky because you're trading in at a high price. You're trading in at the top of the range, which can easily get drawn down on, as it did here. And then you sit on a loss for a while, which is not good. And then you think, do I get out of the trade? So there's more risk here, and there's more risk of loss because breakouts often fail. But when you get them right, you can actually trade right here and get in pretty much instant wins and instant profits in your trade. And then all you have to do is let the trade ride. So with a breakout, you have to do the TA first and get your resistance zone, get your support zone, and figure out if the market is actually trying to break out of this range. If it is, then the price will be moving up here, the Bollinger Bands will be expanding, and the RSI should be showing you that the relative strength of that move is strengthening and coming into support and moving as well. If the price is moving up into this top end and the relative strength is weak, that's not very good for a trade because it's showing you that the price is there, but the market isn't really wanting to break out. You can see here that this is basically showing that the relative strength, this purple line here, is actually moving up into this and it's trying to break out of it. Now, again, it might get rejected to the downside again, and that's the risk of breakout trading. But on occasion, you actually get it right, and then you get obviously a really fantastic move to the upside within basically one trade. So you go ahead, you trade on your system, you enter your sample long trade, you get in at that price, you put the stop loss down at the bottom of the range, just in case, maybe you want to let the trade run out again. And if you don't want to let the trade run out, and you want to use high leverage, then just take it as a win or a loss trade. Either it does break out or you simply lose that trade with a small loss and get out. And then put your take profit wherever you want. Either just wait until the price consolidates again, so that would be here, or if you're in a bigger uptrend and you think that the asset is actually trending for the long term, like for the next 6-12 months, why not just stay in the trade and see if you can ride profits higher and higher? So you'd open order here. Maybe you want to use a little bit of leverage. Especially if you're trading short term, you want to try and get that as a win or a loss trade with a little bit of leverage. Because you have a tight stop loss, you can use a bit more leverage, open that trade. So that's how to use Bollinger Bands. Like I said, deposit and trading bonuses to the exchanges I use down below, and TradingView is free, so go and sign up for an account as well. I'm James, this is MyDG. Cheers for watching, and I'll see you in the next one.